Welcome to Behind the Numbers, where we explore the technology and leadership shaping modern finance today. I'm Sonia Laxton, and joining me today is Faisal Masood, co-founder of TreasuryCube. In this episode, we'll walk through the story behind the mission, the challenges that it solves, and all things that make Faisal, and TreasuryCube, TreasuryCube. Faisal, welcome. It's a pleasure to have you.
Thank you for the opportunity.
Now, for many people, Treasury might sound like something reserved for big banks or financial departments. But in reality, Treasury affects all kinds of businesses, from people working in areas like retail banking to corporate to everything else. And there are people who rely on Treasury for everything, but they do not fully understand what it means. So for those of us like me, who aren't deep in the world of finance, can you help us understand what Treasury really means? What kinds of challenges does it solve for companies? And why does it matter to people like me who might not work in Treasury themselves?
That's a great question. Thanks for the question. So we need to separate two things, right? One is corporate treasury and one is treasury management within banks. Treasury management within banks is a completely different animal. It works differently. It has a different purpose. But within corporates, whether you have a large company or a small company, what matters is cash, right? Your liquidity. And the ability to manage that liquidity is at the core of every organization's business cycle. Now, you can separate out treasury management to two broad categories. One is the operational aspect of it, one is the strategic aspect of it. But at the core of cash management, you have the ability to see all your cash balances that you collect from all your banks in one place. You have the ability to forecast your cash needs. And also at the same time, you have cash payments, which are basically your payments to your suppliers, the ability to track the receipts coming from your customers. All of that put together is more of an operational thing where you talk about the cash payments, the visibility, and you put that into an operational bucket. Now, when you go to the strategic side of things, it's like more of a holistic view of how you manage, for example, your debt. If you have a complex group structure, when you talk about having subsidiaries in different countries and you need to track the funds movement between those subsidiaries, all of that is more of the strategic aspect and the reporting around it. So you're aggregating data from your internal systems, from your banks, putting it together, and then you're identifying trends, risks, you're tracking your other aspects of your debt and derivatives. So all of that put together is called treasury management, the operational aspect of things, as well as the strategic aspect of things.
That sounds very good. It makes a lot of sense now. So companies don't just wake up one day and decide to build a treasury platform. There's usually a moment, a problem, or experience that sparks that idea. Can you tell us a bit about your background and maybe share the story of when you and Shahab realized we need to build that?
No, yeah, absolutely. Treasury management has traditionally been a domain for much larger companies, right? Who have very complex needs. They have a geographical presence which spans multiple currencies. They have multi-currency dealings. And in the past 2 decades, that had been the case. The companies with revenues over 2 billion or so were the only ones who could actually afford a treasury management system because of the complexity of their cash operations. We used to go to conferences, and specifically the biggest conference in the industry is the AFP conference that's held every year in different locations. And our clients would tell us that, we want the ability to manage our liquidity, but we can't really afford a system. And the reason for that is that moving from the larger corporates domain to the mid-market segment, there are a few players who've done that over time. But it's still not democratized. And that's where, our mission, and we do mean business when we talk about democratized treasury management. And that means it's just the ability for mid-sized companies to actually have a treasury management system which allows them to have visibility and have much more operational efficiencies when it comes to their cash management processes, as well as the more complex needs if they have debt or they have complex legal entity or business structures. So we realized that this is a segment which is needed. And there's there are very few modern platforms that were built in the last 5 years, which are cloud first, and now with AI, you need AI native functionality built into a system. That's only possible in the modern versions of the systems. So that's the idea behind TreasuryCube, where we wanted to democratize the ability of mid-sized companies to have the ability to manage their liquidity.
That makes sense. So, like you just said, a lot of this technology is built around the biggest players. But you have chosen to focus on these particular mid-sized companies. So what made you decide to serve this particular segment, and how are their needs separate and different from the big enterprises? Because the only thing I think you just mentioned is the fact that they couldn't afford to do the system. But what made you guys decide that this is the thing that this is the market that we can capture?
That's a very interesting question, because initially when we started off, we said, okay, the mid-market is where the place for a treasury management system, which is not only affordable, it's configurable, it's one solution. That's what they could. But then what we realized is that even large corporates have very similar problems. Just the scope, the volumes, the number of banks, the number of transactions is much more. But mid-sized companies have the same issues. They might not have derivatives and so on. But then in the end of the day, what they need is they still need a visibility and a holistic view into their liquidity management. So we started off wanting to cater to mid-sized organizations, but the complexity that is required by mid-sized organizations is very similar to what large corporates need. So literally, a lot of our clients now are large corporates where they do have those needs. It's just a difference in the volumes of the amount of businesses they have or the number of legal entities. It's just some complexity you add here or there, but at the core of it, whether it's a mid-size or a large corporate, that is different. However, I will bring one thing to your attention. Cash management for small to mid-sized companies, that's also a requirement. At the core of it, cash management is a requirement everywhere. The ability to see what you have in your banks, ability to forecast what you need going forward, and the ability to make payments. That's a universal requirement. But there are plenty of players out there.
Well, that makes a lot of sense. So from that perspective, let's break down some of the jargon for our listeners. Treasury management can sound very intimidating, management. But it's really about making sure, like you just said, for companies to have the visibility and the control they need, like you just mentioned. So how would you explain treasury management to someone who's new to the concept? And what are the real benefits for a corporate team? I mean, some of that you've already mentioned, but just specific to a corporate team, what are the real benefits?
Yeah, so let me just break it down, right? So we categorize companies into two types. Basically, there's a pre-treasury kind of setup and there's a post-treasury. Wherever you see the word treasurer in an organization's hierarchy of titles, you'll know that their cash management requirements are pretty complex and they need a specific department for that. Within the office of the CFO, you might have an FP&A person dealing with accounts payable or accounts receivable or collecting position from your banks to understand what your cash position is on every day. But when we go back to basics, every company will require to get a list of all the banks, collect whatever they have in their banks, will need to make payments. It will need to know, based on their cash forecasts, what the deficits or surplus is within their cash forecast and when they would need to plug in those holes when it comes to debt, right? So you don't want to get liquidity shocks. You need to be able to foresee that. You want more control over your payment processes, which requires audit workflows, it requires approval levels, and so on and so forth. Right? There are other things. You don't want an increase in interest rate or in a volatile interest rate environment to actually surprise you in one way or the other. So when you put all of this together, it's not only automation, it's not only the ability to run your operations from a cash perspective, but it's the ability to have a holistic view into everything. Because if you don't, the environment is pretty volatile. Just giving you an example, when you model your cash forecasts, you need to be able to see that if you have a deterioration in the business environment, your receivables go down, or your cost of sales goes up, how will you model all of that? So putting all of that together, it's every organization that needs to be able to manage its cash. How they do it, sometimes there are informal ways in pre-treasury companies. Post-treasury companies have no choice. But then when you have a configured solution like we built, even though one size doesn't fit all, you can use limited set of functionality, but then what it does is that puts everyone into a workflow, into a process. You have to make sure that the process is there, whether the individuals are there or not, whether your trusted person is there or not, or a competent person. If you put things into a workflow, you'll be able to sleep better.
Absolutely, I agree. So, skipping back to something that you mentioned earlier, you were talking about democratizing treasury, which seemed like a very powerful statement. But what does it actually mean for companies that you're working with? How does it show up in your product and the way that you go to market?
Yeah, it's a great question. And I know the word democratize has been overused into everything, right? Democratize finance, democratize trading. Everyone's going to Robinhood to make a quick buck and celebrate it, or lose money and go down the silent way. But democratized treasury actually means that make it accessible to companies, whatever their size, whether it fits, whether they need one set of requirements or they need a much more complex requirements. You have the ability to scale up or scale down based on your needs. And I want folks to understand that one size does not fit all. There are plenty of finance teams who just get lost within whether they need this system, which they will be charged a whole lot for, or what are their needs? You need to know yourself and what you need, and put that list down first of the use cases that you have a problem with, what your pain points are. And that's the only way you'll be able to go out and decide which system you want to get, or whether you need a system at all. A small company with a couple of banks and a few bank accounts, a couple of hundred payments a month, they don't need a treasury management system. They can track everything in Excel.
So every startup has that first customer who helps shape the product. Now, what was that very first problem you tackled, and how did you feel that experience influenced TreasuryCube's evolution?
Yeah, no, that's a very interesting question. We started off thinking that, we'd build a very comprehensive treasury risk management system. And, one of our partner, who's the chief product officer, Shahab, he's done some of the largest implementations in the world, some very big Fortune 100 companies. And he came out with a vision that he wanted to build everything in one application, from the most basic functionality to the most complex ones. And what we found out was that very specific finance teams just care about very specific things, right? And then, for example, our first client cared about, the CFO just needed to know how much money they had. They were a private equity owned company, highly levered with debt. They needed to make sure that they had enough money to keep repaying their revolvers, to keep paying their debt installments. And they had banks and companies, there are like 12 companies in different countries, and they needed to pool that money, and then it wasn't with one bank. So that use case which had the most priority. So we built out a cash pooling system where they were able to pull in money from all of their subsidiaries into a central pooling account. And then how do you make sure that the other company does not have a deficit in their cash flows based on the forecast, or if they go through some adverse scenarios? So we basically built a cash forecasting process for them as well, wherein said, okay, if you are going to need money in week 4, you need to make sure that you get the money back from your pooling account. So that was, every company, when they care about something which is the most important, that is what you make sure that you enhance that functionality, the user experience around it. You get comments from your customers that, oh, this button should have been here and there. And that's where real testing. My advice for folks building out applications, make sure that you take customer feedback and you incorporate it, because you can think as much as you want in your drawing room designing a software or on your desk, wherever you do it. But reality is that you will need to incorporate their feedback into your application, because it's very important, because how they feel comfortable. And it's very likely that if they can feel comfortable doing something in a certain workflow, then others will as well. So that was something that we learned in some of our first implementations. Just when someone cares about something more, you focus on that more. Don't try to pitch everything else to them. Now, I will say one thing, though. When it comes to treasurers, they need the whole deal. They know exactly what they need, what they're talking about, what their pain points are. And if they're a large company, they'll already have a treasury management system. So they're the ones who really know about, in the post-treasury type of companies, what they want, what their pain points are. And that's where they will tell you what you need. For others, we play a little bit more of a finance transformation kind of role, treasury transformation, where we advise them, okay, this is something you might not need, this is something you need. But if you need it down the line, our application can take care of it.
Right, so that kind of segues into the thing that I want to ask next for you, because that sort of applies to everything that's in a startup, but more specifically to you. So it's interesting to see how products grow and change because of the feedback that you get from your customers. Now, have you iterated TreasuryCube over the years, and are there any features or approaches that your customers especially appreciated?
Yeah, that's a very interesting question, and I do have quite a bit of a controversial opinion around that stuff, but then let me just take it from the basics, right? So we started off as a cash management tool, basically payments, cash visibility. And then after that, everything followed, the debt derivatives, the in-house structures, the netting, and so on, all the complex stuff with Treasury. But then what we realized is that everyone's using AI as a marketing tool, right? Incorporating AI into your processes, incorporating AI into your cash forecasting. And what we found out over time, after interviewing a lot of people, is that everyone cares about the system and how it works. But because boards have been told or have given down instructions that they need to have AI in their applications or anything new that they'll get an approval for, AI became the new shiny thing that everyone wanted to get into. So then what are you going to do with AI, right? How is it going to improve your experience? What I would say is that the basics are more important. You have to have the ability to have a robust enterprise-grade system. But adding AI to the functionality, you have to define your use cases. So when it comes to our roadmap, you do have to incorporate the bread and butter and the basic needs for a cash management system. But then on top of that, if you're able to bring in AI to actually solve a problem, not to just market it, that is the most important aspect. And with us, we've identified a couple of use cases which are primarily cash forecasting. You could talk about bank reconciliations and using AI to do that. You could use fraud detection using AI to do that. But then when you put all of that together, one thing I will say is that there's no space for complacency. You have to keep innovating. And the newer players in their newer platforms, cloud-based platforms, have a much more agile approach and they can innovate pretty fast. While a lot of legacy players are struggling, they are trying, but it does take time. They do have lots of data. They definitely have that advantage. But when it comes to AI, to pivot yourself to moving more towards maybe agentic use cases or using AI within your certain processes, all of that put together, they are getting there, but it takes longer. We as a smaller player, we're able to pivot faster and then make it much more specific use cases for AI within our setup. But let's not forget, you need to have a robust system first. You cannot simply sell a treasury management system to a customer based on that we have AI. That AI needs to work for what their problem is, not just because it's AI. Does that make sense?
Absolutely. And what's interesting is that 3 weeks ago in a conference in Africa, somebody mentioned it exactly like you did. And they said that we understand this buzzword of AI. We appreciate the need for AI, but you need to have a robust foundational system first before you actually apply the AI on it. So that's very true. Now, I understand where you're coming from there. To the next question, which is the vision and the future of TreasuryCube that you have in your mind.
Yeah, no, absolutely. So, security obviously is non-negotiable. You talk about the ability to scale up and scale down with the customer. That's also something that's a basic. There's a lot of pain points around customer service for a lot of the current corporates, and what they've experienced. There's a lot of friction around the implementation. So wherever we talk about new functionality, we have to say, what is at the core of a good implementation? It's your cost. We manage that by fixed price implementations. What is it when it comes to your recurring? We don't charge by user or by module, and we did our research on that. You need one comprehensive application, not applications that were bolted onto each other. And then there's no sense of complacency when it comes to being able to out-innovate. In the end of the day, the future is going towards more enterprise liquidity management. And what that means is that aggregation of data sources, connectivity, the ability to advise and have a more strategic role, or not just being an operational system, right? The ability to actually do what matters. Like if you have debt covenants and a system flagging out that, yes, these are the debt covenants. If you have risks on your hedging strategy, that's something that a system, if it's able to tell you, and I flag that works as well. If you already have deteriorating working capital trends, that's something that's very important to keep in mind. So all of this put together, out-innovating while making sure the foundations are robust is what we look at. And we have tons of things on our roadmap. We just actually have arguments internally. What are we going to prioritize first? A CFO likes that, the treasurer likes that, what are we going to do? So there's always a robust discussion around that. But we figured a way out to make sure that based on our client and implementations in the pipeline, we prioritize certain things. And while we're doing that, we keep the long term and the medium term in mind. Because in the end of the day, an implementation is an experience. Why would someone even who's gone through an implementation want to do all of that again? You have to reduce the friction, make it simple, and then make it very easy to use. I mean, some of these systems you go through, man, oh my God, you need to read this thick books for them. We have a system which you can just play around with like Excel. And that was one of the core beliefs when we looked at how we're going to structure the whole thing.
Just a couple of questions ago, we were talking about AI and the buzzword that it's become. But what I really want to hear from you is what's actually happening with AI and machine learning in Treasury.
Yeah, no, that's a great question. It just depends who you ask it from. But there are two things, right? There's AI, which actually aggregates data from everywhere else. It's learned based on large language models. And there is machine learning, which just detects a lot of patterns in your data and then identifies trends. And that's more used on fraud recognition or seasonality when it comes to cash forecasting. But the main thing that you need to look at within Treasury, there are just 3 to 4 main areas that you need to look at. One is your cash forecasting. It's extremely important to incorporate different scenarios. When it comes to your bank reconciliations, it's very operationally intensive, very time intensive. So you need to be able to enhance that based on everything that comes in from your banks and the transactions and match it with your cash flows. And what that means is that your accounting is based on it. So you have to get that right. And then the learning. Your bank statements, that when that comes in, if some jobs fail or you don't get all your cash position, the ability of the system to tell you that, okay, this has happened, you need to monitor this. So that is just some of the basics. But as an organization, you have to identify what you need from AI, right? And it has to be explainable. It has to be back-testable. You can't just say, okay, this is what AI did, it's predicting the future. That might be garbage. If you have garbage data in, you'll have garbage data out. So the explainability of the AI, we look at something called first principle thinking, where you just strip out all existing assumptions and you rebuild assumptions. And when you rebuild assumptions, what that means is that, let's say you're looking at a a medical devices versus an infrastructure company, and you're looking at different factors that affect your business cycles. We realized that, for example, medical devices or pharmaceuticals, for that matter, they depend entirely on government policies for reimbursement, for your approval limits, regulatory stuff. Then if you look at an infrastructure company, let's say a solar panel company, they depend on, government regulations and, the whole incentive structure built for that industry. And then there are company-specific factors like how competitive their product is and so on and so forth. Now, you can't compare. You cannot say that every one size fits all. So you have to decide what will work for you and then build those assumptions back in. And then back test that with your historical data. People think that it's an easy thing to do. It's not an easy thing to do. You have to be able to produce future results and use historical data to say what today would look like and test it out, whether your causation or what caused the fluctuation in things like revenue or cash inflows, for example, or higher cost of sales, to what you actually saw, what the actuals were, and see whether those correlations hold up, right? So it has to be explainable. It can't be a black box. You're not going to get the results from a black box. That's the only thing that I'll say on this. And that's what we're working towards, where we see the vision of every industry will have its own bespoke models. And whether it's an external aggregator who's putting that together has the specialist best model for that industry, or whether it is you working out what works for your specific industry and company. It can be either or, it just depends on the resources. But make it explainable, try understand it, and that will be the best use of your time and money. But get the basics right. You need to have the right data, you need to have the right metadata, which is the data about the data, and that's the only way you're able to have meaningful predictions or forecasts or matching on your reconciliations and so on and so forth. So do not get sold to the marketing hype. Understand it, and if you can understand it, that it means it will work. If you're confused, it means they're just using too many buzzwords.
Completely understand where you're coming from. Faisal, thank you so much. This has been an absolutely fantastic conversation. But before we wrap up, I'd like to end the whole thing with a few rapid-fire questions that sort of put you on the spot, and you don't have to think about it. You just tell me exactly what you feel like. So the first question is, what keeps you awake at night and right now as a co-founder, and how are you tackling that?
Yeah, I mean, there are two primary things. When it comes to staying up at night, you always are looking at your across your shoulder, trying to make sure your security and your compliance and everything else is very robust. Because in the end of the day, we're taking control of banks and that data. And then the second thing is, so I've been playing the markets for a while, and I don't think a lot of folks realized how volatile the environment is right now, with our deficits ballooning in the US, with a completely regulatory, tariff-driven environment. Those are very, very major risks ahead for us. So when something does happen, no one's going to say that was it in your control. It's never in our control. But what they will ask is, did you prepare for it? If you do know that these are the risks, what did you do to address these risks? And that's the most important part. That I think that would be my message for our audience.
That was interesting. So the next question would be, what is the single best piece of advice that you'd give to somebody who's evaluating a TMS for their first time?
Know what you want, and if you don't know what you want, get some help first for someone to advise you on what you need before you get out, and then everyone offers the sun and everything under it to you and tries to sell it to you.
Okay, my favorite question for you. What are the essential lessons that you've learned as a co-founder?
Oh yeah, that's a tough one. It'll expose your weaknesses, and you'll find out more about your strengths. Know your strengths. Don't expect to work short hours. You'll be working long hours. It's not going to be glamorous. It's not going to be fun. You still have to persevere. Uncertainty is the bedrock of starting up a startup. But then what you also need to realize is that you need to stay in your lanes. You need to know what your strengths are, stay in your lane and keep doing what you're doing that you're strong at. And eventually you need to get the right people in who can take care of the other stuff, right? When you do that, you create a winning team, and that's very important. It's very understood. If you're not good at something, you need to fire yourself from that job.
Absolutely. Thank you so much for that, Faisal. Your story and your insights were all very valuable. For everyone listening, you'll find links to TreasuryCube and more in our show notes. If you enjoyed today's episode, please follow, rate, and share the person behind the numbers. I'm Sonia Laxton. Thanks for joining us. See you next time.